Okay, we're on the last piece of um of budgeting, and it has to do with the cash balance. And if you're preparing a budget, for example, the last thing you're going to actually figure out is cash. Do you believe it? Because you need all these receipts and disbursements from every place else before you can figure out what your cash number is going to be. So it's not easy. I'd say it's a tricky part. And this is not an operating budget. This is a financial budget. So the first thing, I want you to think that there are three pieces to this. It's going to be cash receipts, then cash disbursements, which will be sort of straightforward, and then the financing piece. All right, and that's it's not impossible, but it's different than what you've done before. Okay, so let's take a look at the example they have here and go through it. This Congo corn, okay, has only credit sales and no cash sales. Okay, their customers are, grocery stores or something like that. They're not selling to bags of corn to individual people, okay? So therefore, cash collections from accounts receivable are critically important to manage, period. Okay, through its history, Congo corn collects its customers' accounts receivable balance according to the following pattern. Now, before we talk about this, understand that people don't pay cash for things, and they don't pay for things when the bill comes, and they don't pay for things when it's due. All right, you're always in a position to try to improve those numbers, but it isn't as good as you think it would be. So in this case, the way they collect 60% of their sales in the same month. All right, and then the following month they collect 35%. And then 5% is uncollectible, people that just don't pay them, and you've got to, and I guess they write off accounts receivable at the end of the second month, which is kind of a tricky thing. You won't see this again, but it's in the book, so we'll go through it. Okay, so in the same month, we're going to record cash receipts of 60% of the sales, and then the following month, we're going to pick up the other 35%. All right, so your book does it a little bit differently than the way I'm going to teach it, but I'll teach it the way they've got it, and I think you might like the way I do it better. We'll see. So since they only make credit sales, we can locate its cash collection activity, and therefore all cash receipts within the following AR schedule. All right, so here we go. So they start out with a beginning balance in accounts receivable of $5,000. Okay, that's your beginning balance. And you can see these other beginning balances are from the ending balance the prior month. So at the end of the month, it's $62.25. That's the beginning for the next month. And at the end of August, it's $62.20. That's the beginning for September. Okay, and then for the quarter, remember, our beginning balance is from July, okay, that $5,000, and the ending balance then would be $64.34, which would be exactly the same as it was right here. All right, so let's see what we've got. Where are our sales? Our sales are, let me have to find them. Okay, what I did was just add the sales up top here. Okay, but I really didn't have to do that because they're down below. And this schedule is starting out with beginning accounts receivable. Okay, we'll see. I don't see a lot of questions that ask you to do this, so we'll do it here. But most of the time, they just have you calculate how much cash is collected during the month. Okay, so the first month. So let's go. We're going to go. These are our sales, and we're going to go month by month. And remember, we've got 60% collected in the month of sale, and these are only credit sales, no cash sales. That's important. And then 35% the following month, and then 5% is uncollectible. So here's our beginning balance in accounts receivable, and the credit sales for the month are $14,000. Okay, how much would we collect? We have sales from June of $12,500. Okay, so in June, in the month of June, we would have collected $60,000. So now we're going to collect 12,500 times 0.35, or $43.75. That's it. So it's 12.5 times 0.35 times 35% is going to give us $43.75. So that's collected in July. And then in July, we've got 14,000 in sales. 14,000 times at 60% gives us 8,400 from July sales. 8,400. Okay, So if you stick with the July thing, we've got 14,000 in sales. This is 60%. 35% of it is 4,900. That's collected the following month. Okay. So that's all we're going to collect. This 5% that's uncollectible, we're not going to do anything with. Okay, because we're only looking at the impacts on accounts receivable here. Okay, so it just hangs out there, but it hasn't been written off yet. It gets written off later on. Okay, so we've got, there's July, and then in August we have 13,800 of sales. So we've got 60% that's collected in August, 35% that's collected in September. Okay, then finally in September we have sales of 14,360, and we're going to collect 60% of those, or 8616. Okay, and then they've got this nasty write-off thing in here. This would be the accounts receivable write-off from the 2 months previous credit sales. So we've got to go back to June. We had 12,500, and that would be 12,500 times 5%. That would give us a write-off of 625. Okay, so we're subtracting this. So here's our beginning accounts receivable. You add credit sales, and then subtract all these cash receipts, and subtract the accounts receivable write-off. So this would be like a debit to, bad debt expense, something like that, and a credit to accounts receivable, assuming they don't have an allowance account. So your ending accounts receivable balance then is 6220. Okay, so let's go to the next month. My beginning balance is 6220 from the ending balance in July, and I've got credit sales for the month are 14,360. And now we're down to here. We would collect right there. These are the collections from September sales. 14,360 times 60%, or 8616. And now we've got another month to write off here. This would be for July. So we would take July's sales of credit sales of 14,000 and multiply that times 5%, and we get $700. And that gives us an ending balance and accounts receivable for each of those months. Okay, now this is about as nasty as it can get. It's got too much stuff in here. Okay, we're going to do maybe 3 of these, and by the time we're done, you'll be able to see it. Okay, what else do we have here? This next page explains all of those transactions in that schedule, so if you need it, you can just use this. Okay, if you need it, this will explain anything to you that you need. Okay, so let's do this multiple choice question. It's a nice question. So we've got this Monroe company, and they've got sales and purchases, and cash is collected from customers. That would mean people that we sold to, okay, in the following manner: 30% in the month of sale, 70% in the following month. So see, we have no write-off here at all. There are no uncollectible accounts to worry about. And then they talk about purchases, okay, because we got purchases here, and labor costs, and then the beginning cash balance is 10,000. So this whole data is probably the same for maybe 3 or 4 multiple choice questions, okay? But what we're looking at here is just accounts receivable, how much cash is collected from customers in March. That's all we need to worry about. Now, I'd be careful with this. I would do it, at least I would write down all these things. You don't have to write down January. You can skip ahead. And if you would do a bunch of these, you'll get better at it, okay? But right off the bat, I would be really careful. So in January, we've got sales of 67,000 times 30% is 20,100. 70%, 46,900. February sales are 88,000. 30% of 88,000 is 26,400. And then 70%, 61,600. And then March's sales are 100,000. 100,000 times 0.30 is 30,000. So the total cash collected from customers in March is 91,600. Okay, so that would be your answer. Alrighty. So you're good with this, right? It's pretty straightforward. We've got another problem to do, and the problems, next one's a purchases problem. So we'll do that next. Okay. If I can turn this off.